Are you looking at the TrueX token, currently ranked way down around number 7900, and wondering why it is flashing heavy sell signals on a long-term falling trend, while a small group of defiant traders insist it is completely undervalued at $1.28? Welcome back to the channel. Today we are diving deep into TrueX, currently sitting at around $1.28. This project has taken the spotlight today because despite a minor 2% surge over the last 24 hours, its long-term macro chart looks incredibly shaky. TrueX operates as a specialized digital asset platform designed to bring institutional-grade clearing, speed, and liquidity to the decentralized ecosystem, making it a critical infrastructure play. It is in sharp focus right now because this sudden volume hiccup has left investors completely split on whether the bottom is finally in or if this is just another temporary pit stop before a deeper plunge. Before we break down whether this token is a massive discount or a dangerous trap, make sure to hit that like button, subscribe to the channel, and drop a comment below with your current strategy. Seriously, leave a comment right now. It helps the video rank and drives the algorithm tremendously. Let's look closely at the technical analysis because the charts tell a very specific story. We are seeing a distinct prolonged downward trend line that has suppressed the price for months. Every single time the price attempts to rally, it hits a heavy wall of resistance and gets pushed right back down. While this recent 2% daily bump feels good for short-term holders, the overall macro momentum is still incredibly weak. The key support levels are being tested repeatedly, and if those levels snap, there is very little historical price action underneath to stop a deeper free fall. Short-term strength is minor and fragile today, but the macro weakness is still dominating the asset. If you look at the algorithmic trading signals and technical analyst sentiment, the consensus is leaning heavily toward a sell or strong sell. The negative signals are piling up on the higher time frames, and the short-term outlook suggests that this minor 24-hour green candle might just be a temporary relief rally designed to liquidate late short positions before another drop. This brings us to the ultimate crypto debate. Is TrueX criminally undervalued, or is it a classic value trap? The bulls argue that because the market cap rank is sitting around number 7900, any sudden influx of enterprise adoption, platform utility, or large-scale partnerships could cause the price to multiply rapidly from these suppressed levels. But the bears argue this is a trap designed to lock in exit liquidity for early venture backers or whale accounts. The downside risks here are massive. Microcap infrastructure tokens like TrueX suffer from extreme volatility and thin order books, meaning retail traders often get trapped because they buy in during a minor green hype candle and find themselves unable to sell without crashing the price further when the volume vanishes. If we look at the bull case, a best case recovery scenario requires a massive surge in underlying clearing volume, platform adoption, or renewed marketing that forces a strong breakout past key resistance lines. The bear case, which is the worst case scenario, shows a painful continuation lower, where the token slowly bleeds out liquidity and hits new all-time lows. In the short term, expect choppy, highly speculative price action driven entirely by momentum day traders. In the long term, its survival depends entirely on whether the project can deliver real-world institutional value or just remain another highly speculative digital asset. So is this recent 2% bounce the start of a legendary reversal, or are you just watching the slow liquidation of a dying crypto asset?